The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello and welcome to Squawk Box. Here are your headlines today. The recovery rally stalls. Global equities pull back with the S&P 500 and Nasdaq both snapping an 8-day winning streak ahead of a key speech from Fed Chair Jerome Powell this week. The Democratic National Convention backs the nominations of Kamala Harris and Tim Walz in a ceremonial vote as former President Barack Obama throws his support behind the nominee.
We have a chance to elect someone who has spent her entire life trying to give people the same chances America gave her. Someone who sees you and hears you.
Tesla catches a break after the EU cuts its planned tariffs on Chinese-made EVs, while Europe rolls out the red carpet for TSMC as the chip maker breaks ground on its first plant to supply automakers in the bloc.
It is an endorsement for Europe as a global innovation powerhouse. The world's largest chip maker is coming to our continent and joining forces with 3 European champions.
And shares in JD.com dive, leading losses in Hong Kong. That's after Walmart confirms it will sell its stake in the Chinese e-commerce player.
It feels as though we're in somewhat of a holding pattern. We're waiting it out for Jackson Hole. Yeah. It's a pivotal event for markets. We know previous events can have ramifications before, after, in terms of the trading pattern. So perfect window for some politics in the mix. And don't forget, we're hearing a lot from the DNC. You saw a clip in the headlines from Barack Obama, a very, very talented speaker, of course. And I think it all took us back several years hearing his commentary about 4 more years of bluster and bumbling and chaos. We've seen the movie before, and he says often the sequel's usually worse. So very snappy comment there. But Trump himself going after Michigan. There was a lot of debate the previous week why he was not going after the battleground states as aggressively. He stepped it up this week, and he's certainly in some of those key swing states now. Yeah,
and as he plays out his own campaign is Donald Trump, I think the question mark for him becomes whether he's able to actually garner up the same kind of support he has previously, just because his rhetoric has remained the same, and literally exactly what Barack Obama has said. And it's about whether his messaging actually resonates still with the same set of people and perhaps a few more, because it's not going to be just dependent on the same people that have voted for him, but whether he can actually turn those swing states again and compete in those areas. So I suppose it's going to be a very tough one, because now he is fighting a more united Democratic Party, right, as opposed to before, where it felt a little bit more fractured.
I think we're going to start talking more about the economics here. We heard a little bit around price gouging and some of the measures Harris might go after. That was quite key for markets. I think economists have been raking over the sort of margins at some of the food producers. So that's quite key. And of course, we're hearing a little bit more about the deficit and why that could be instrumental for some of the major candidates to target. And that is from Trump to Harris over both campaigns.
Yeah. Let's see how this fares, though, because it's still a long way to go. What's it, 70-odd days still before we have that election, of course, stateside. Very pivotal to the markets. But as we sit with a wait-and-see approach, this is pretty much what the market had in store, actually, in yesterday's trading then overall. And it was a down day. I guess it was a little bit too good to be true, wasn't it, Karen? Because this market had gone up for around 8 straight days then. And it was a question mark as to whether you would have seen what would have actually been for the S&P 500, its longest winning streak since 2004. It wasn't to be, however. It would have been the longest winning streak in 20 years if just the S&P 500 had managed to actually go up in yesterday's trading day. But not to be then. A bit of a down day. Perhaps a little bit of a breather as well for this market, anticipating some commentary, of course, from Fed Chair Jerome Powell at the Jackson Hole Symposium. That's anticipated to come through, of course, on Friday. We do have revisions as well to some payroll data as well, anticipated later on today. So that could also be in market play as well today. today. Just very interesting to look out for all of that, along, of course, with July Fed minutes, which perhaps could give a clearer sense of what exactly the Fed was thinking about and how close they actually were to cutting even in that July meeting, whether that was even a thought for them. For now, though, a bit of a breather for this market picture, but really only just. We're still moving relatively higher across the board here if one was to take a look at some of the mega cap momentum that is in store. We'll unpack that throughout the show then. Onto the Treasury front here, and your bond market is very interesting because yields on U.S. government bond went broadly lower yesterday after the Philadelphia Fed survey actually came out as well. It did drop points, meaning that the non-manufacturing activity in the U.S. decreased 6 points to minus 25.1. This continues to reflect increased weakness then in some parts. So there is still this softening of this data. It's a little bit of this data being everywhere, and I guess this kind of points to that. There's softening in non-manufacturing elements then that you are seeing across the United States, but not so much so that perhaps it's leading to that recession. That's the question mark then for some of the market players and what a lot of them have actually been noting. So you're seeing then the 10-year note actually drop off quite considerably. We're at 3.88 yesterday, 3.81 today then for the 10-year note, below 4% then for the more rate-sensitive 2-year. Onto your dollar crosses here, and it's looking for direction ahead of important economic data, as I've just noted then across today. You're seeing dollar-yen slip back below 146 even. We're at 147 yesterday, so slip back even further, below 145 now, or 146, should I say, 145.69 is where we're at there. Still some strength just beginning to pick up a little bit then for the dollar today. But as you can see as well, just marginal strength then for the dollar across sterling and euro. But 130.27, certainly a significant mark there for sterling as well. On your commodities front here, here's your WTI and Brent marks. And this is interesting because oil prices are down just a touch. Estimates here are showing swelling in U.S. inventories and expectations that tensions in the Middle East perhaps won't boil over as much. Then is the anticipation here, but it's only marginal losses that you're seeing for both Brent crude and WTI. Spot gold, yesterday hitting that record high for it, dropping a little bit lower by the close, but still managing to find some gains then today, even if it is just marginal. And very quickly, here's your Asian market picture, also down then. Hang Seng slumping on the back of JD.com's decline. It's down around 11% this morning is JD.com. And it's a report that the top shareholder, Walmart, well, they're planning to sell their large stake in the company. So it's hit that stock there. That's why you're seeing a 1% decline then in the Hang Seng. But relative negativity across the board then benign, but following in from what we saw stateside, Karen.
Let's talk about the Fed. Governor Michelle Bowman says she will remain cautious in her approach to adjusting interest rates and that there is still some upside risk to prices. Bowman argued that the FOMC needs to be patient to avoid undermining the progress it has made in its fight against inflation. However, the Fed governor stressed that her baseline outlook is for inflation to continue declining under the current policy stance. Joining us now is Charles-Henri Moncheur, who is the CIO at Banksys. Charles-Henri, thank you so much for joining us again. And I can see you've been revisiting a 1966 Western with the good, the bad and the ugly. But the market's focusing on the bad the other week in terms of a growth scare. Just run us through how you're thinking about these markets.
Well, it's not so far away from Goldilocks. If you think about it, we have inflation which continues to come down. Economic growth is still decent with sign of weakness, but still holding up. Earnings season was pretty good. And the Fed is very close to start to cutting rates. So if you put all of this together, the conditions for equity markets are still quite good. So yes, there are a lot of risk out there. But let's say the headline is still decent.
Let me pick up on the bad part here, because this is what you're debating, some of the macro factors and what they really looked like, because the market was concerned that they'd missed something, that in fact it wasn't going to be a soft landing, it could be a hard landing. That is something up for debate again at Jackson Hole this week as we waited out for more signals on monetary policy. What are your expectations here? Is a soft landing in the bag, or are there risks here? We're looking at a hard landing potential and therefore aggressive rate cuts.
Well, first, if we talk about Jackson Hole, let's keep in mind that here we're going to see a Fed chairman who has restored credibility. Think about it, unemployment rate is near all-time low. Inflation is coming down. The economy is not collapsing. So he has some time, the Fed is data dependent. This is always what he has mentioned. There is a very important job report on the 9th of September. So he doesn't have to rush. He can obviously hint about this first rate cut taking place in September. He can open the door to a 50 basis point, but without, let's say, panicking. There is no reason to panic. And then maybe talk about the pace. There could still be like a hawkish surprise, maybe with the neutral rates, which might be higher than maybe the market believes. And then maybe also a dovish surprise with the pace of quantitative tightening. This is also something you can mention. So I think that the key point, and this is why maybe the VIX is that low and why markets are quite relaxed, is that unlike a few years ago, we are facing a chairman who has been quite good, with his monetary policy. So he still have time. He has no reason to rush.
Yeah, Charles-Henri, I mean, one of the things, though, is that you could still be worried about the U.S. consumer, right? One of the things that I've heard from our guest stateside, actually, he said that the U.S. consumer isn't necessarily slowing down, they're just concentrating. Do you think that could be really what's at play here, that they're just focusing in on things like holidays when need be, when schools open, that's what they focus on as well?
Yeah, well, talking about holidays and also leisure spending, there are so many indicators pointing towards indeed, a meaningful slowdown. But this has also something to do, obviously, with the prices, which might, be too high after COVID. Many companies take advantage to rise prices. And now, many consumers are feeling the pain. So they are asking to some kind of slowdown on that side before, spending again. And this is also maybe one of the reasons why inflation might continue to slow down, because companies at some point might have to adjust. And then maybe the downside risk here is also on the earnings side, because as mentioned before, earnings so far for companies has been quite good. But at some point, if these pricing elements start to hit consumer spending, they will have to, let's say, consider, cooling down on the pricing side, and that could put some pressure on the margin, but also on the top line. But we're not there yet, because again, earnings are still doing okay-ish. But you're right to point out some of these, indicators showing that indeed the US consumer is starting to cool down.
Yeah. The other part of all of this then, when we go back to your overall theme, the good, the bad, and the ugly here, is the ugly part, right? Fiscal spending. Is that how you see inflation perhaps not easing as much as it would have in the past? Because it doesn't feel as though that spending is going to ease at any point in time, whether you get a new administration or not.
You're right. The only certainty with the US elections is that whoever is elected is going to spend. And we don't see, let's say, fiscal deficits improving, quite the contrary. And I still have in mind what happened in the UK summer 2023, when we had this, very, kind of scary fiscal crisis hitting the markets. And I still have in mind the fact that this can happen in Europe, like in France, for instance, but also in the US. And to us, that's indeed the ugly part. The reason why the economy is holding up, quite well is because also we had all of this spending, but there's always a price to pay. And at some point, the bill will come due. And this is what we see as a potential downside risk for the market. Maybe not this month, but let's say later this year or in 2025.
Charles-Henri, to that point, there is some debate as to whether Harris should distance herself from Bidenomics and change tact here. The policy that we're seeing on the back of COVID for some sort of state intervention with the IRA. If we do see a change in policy, does that take away some of the risk that you see?
I don't know, because for the time being, the Kalamanomics, which is the new wording, look a bit scary. I think the markets was a bit, let's say, scared when they heard about the economic program on Friday. And this is, by the way, the day where golds hit a new all-time high. And I think one of the downside for the market now that Mrs. Harris is very well placed in the polls is that we got a blue sweep. And in case of a blue sweep, maybe the policy in place might not be the best one for the market, because the reality is that Bidenomics were quite good for equity markets. So the Kalamanomics might not be as good as the Bidenomics. Time will tell.
Charles-Henri, great to catch up with you and to hear your thoughts on that. Thank you so much for joining us. Charles-Henri Monchot, who is the CIO of Bank Cs. Fed officials and central bankers will descend on Wyoming this week for the annual Jackson Hole Symposium. Our US colleagues will be speaking to a host of leading voices from the Fed, as well as bringing you all the important keynote from the Chair Jerome Powell on Friday. And Democratic Party delegates have backed Kamala Harris and Tim Walz as the party's nominees for president and vice president in a roll call vote at the DNC. The ceremonial vote follows the official nomination of Harris virtually over 2 weeks ago. Harris and Walz travelled to Wisconsin for a campaign rally at the same location that hosted last month's Republican convention as they look to gain ground in the key swing state.
Make no mistake, as we all know, this campaign is not just about us versus Donald Trump. This is not just about us versus Donald Trump. This is about two very different visions for our nation. One, ours, focused on the future. The other, focused on the past. And Wisconsin, we fight for the future.
Former President Barack Obama headlined the second day of the convention, throwing his support behind Kamala Harris.
I am feeling hopeful because this convention has always been pretty good to kids with funny names who believe in a country where anything is possible. Because we have a chance to elect someone who has spent her entire life trying to give people the same chances America gave her. Someone who sees you and hears you and will get up every single day and fight for you. The next president of the United States of America, Kamala Harris.
The independent presidential candidate, Robert J. Kennedy Jr., is considering ending his campaign to support Donald Trump, according to his running mate, Nicole Shanahan. Trump has said he would consider offering Kennedy a role in his potential administration if the independents were to drop out and support him. Kennedy, who has qualified for the ballot in two key battleground states, Michigan and North Carolina, said in a social media statement that he is willing to speak with any political leaders to go further the goals of his campaign.
So, coming up on the show, the European Commission, well, they've decided to cut proposed tariffs on EV imports from China. We'll have the details of that next. Plus, could Taylor Swift's European tour create bad blood for central banks, or can they perhaps shake off the effects of increased consumer travel and spending? We'll bring you that story a little bit later on in the show. And we'll dig into the latest market action, what to expect from this week's Fed Summit with Andrew Sheets of Morgan Stanley. That interview coming up at 8 a.m. CET.
CNBC Connect is back in Bangkok, Thailand. Join the world's top entrepreneurs and C-suite executives for an invite-only leadership retreat. On the agenda, powering innovation and growth in Asia. Is AI transforming industries and creating opportunities? And get insights on building sustainable and resilient businesses. Be part of Managing Asia Live. Network and join an interactive brainstorm session. CNBC Connect, powering innovation and growth in Asia on September 4. Register now.
European markets also breaking a winning streak yesterday in reverse, and you can see this morning we are called slightly higher across the board. The DAX scooping up about 25 pre-market, and you can see arrows pointed higher. While Sweden's central bank cut rates by 25 basis points to 3.5% after inflation undershot its 2% target for a second straight month. The Riksbank added that rates could be cut 2 or 3 more times this year if the inflation outlook remains the same. The governor of the Riksbank told CNBC the risk of higher inflation has eased.
With that pace, we will be down to 2.75 or 3% by year end. So that's a pretty quick move ahead of many other central banks. So we are expecting the economy to pick up gradually in the end of this year and 2025.
The economic outlook remains uncertain, though. You've also flagged you're watching economic growth and inflation very closely. What would you say is the most critical risk for the outlook right now?
Well, for sure, we have a very, very uncertain geopolitical situation, and that could have implications for supply situation, oil prices, gas prices. So for sure, that's a relevant risk. We also have the currency, which has been a little bit stronger now lately, but that could pose a risk for inflation. And then the price-setting behavior of firms. We don't know whether they are back to kind of where they were before the inflation went up, or whether they are actually inclined to raise prices again as the economy picks up. So that's the kind of. There are also risks on the downside for sure that maybe the inflation will come out softer than we think.
Now, European Commission President Ursula von der Leyen and German Chancellor Olaf Scholz broke ground on TSMC's new Dresden chip plant following the Commission's approval of 5 billion euros in state aid for the project. Now, the aid approval is the largest so far under the bloc's CHIPS Act, with the joint venture between TSMC and several major European chip players expected to cost 10 billion euros in total. Von der Leyen hailed the benefits for all sides of the project.
It is an endorsement for Europe as a global innovation powerhouse. The world's largest chip maker is coming to our continent and joining forces with 3 European champions. And the benefits will be felt well beyond Dresden and Saxony. At a time of growing geopolitical tensions, TSMC will also benefit from geographic diversification to Europe, better access to our European strength, like automotive, as you said, the customers of importance for you, and to our unique single market. So this is a true win-win situation for all of us.
Now, the European Commission has adjusted proposed tariff rates on imports of Chinese battery electric vehicles, with Tesla seeing the sharpest reduction, now facing duties of 9% versus the anticipated 20.8%. Sylvia joining us for this story then. Seems like a good news week then for Elon Musk here. One, he could be put in as an ambassador or some sort of advisory role for Donald Trump if he gets elected. And now the EV tariffs get cut.
Definitely when it comes to the EV tariffs, there are some good news here for Tesla. This is obviously in the wake of the announcement from the European Commission announcing a 9% tariff on Elon Musk's company as part of this broader investigation into state subsidies given by China. Now, the figure is well below what Tesla's competitors are likely to be paying, and therefore why we're saying that there's some good news here for Tesla. But let me give you the comparisons. BYD is facing a 17% levy, Geely 19.3%, and SAIC just above 36%. So the level of tariffs here is actually quite different from one company to the other and is dependent on how much support companies actually obtained by the Chinese government. In Tesla's case, the support was mostly targeted for the provision of batteries below market price. Now, you might be asking at this stage, why has the European Commission changed the tariffs from the numbers it presented earlier this summer? Now, the institution made it clear that it received substantiated comments on the provisional measures and managed to make further conclusions, which hadn't been possible in the earlier stages of this investigation. However, this is not the end of this process. Car makers have until the end of the month to request hearings and provide more comments, and then a final vote by the 27 member states is needed as well. Now, the duties would then remain in place for 5 years, and that's at least a minimum in place for 5 years. Now, worth noting as well that these measures come on top of the 10% duty that's already in place for foreign cars imported into the EU. The Chinese Chamber of Commerce to the EU expressed its strong dissatisfaction and firm opposition to the EC's protectionist approach. So this tension that we had seen already over the last couple of months is continuing, even though the European Commission has cut some of these levies, in terms of the level, of course. The Chinese authorities are still very much opposing these ideas. Let's not forget that they have taken measures on their side as well. So let's see how this is going to play out.
What we've heard so far around the demand for EVs in Europe is that it has been somewhat tepid. So some of the initial enthusiasm that has faded, which suggests perhaps there's some price sensitivity among consumers, not just concerns around adopting an EV with regulation. So what happens from here? It feels as though there could be a short and a medium-term view. Short-term, Are the prices passed on? The increases on tariffs must be passed on, and ticket prices must go up long term. Do we see a reallocation of resources where more manufacturing is relocated to Europe?
Likely. And some of these companies, the Chinese EV makers, are already having plans to develop even further their manufacturing plants in Europe. When you think about also what the comments from European brands thus far, they're also against these tariffs. So it's very much an opinion within the whole sector. It's not so much Chinese EVs versus European EVs. It just seems the whole sector is very much against these ideas, these tariffs. We've spoken to some of the CEOs here in Europe as well, and that's been a very strong message that they have conveyed thus far. I would just highlight that this is likely to be the dynamic for this second term of Ursula von der Leyen. She is about to start her second mandate as President of the European Commission. Speaking with an analyst yesterday, he very much reiterated that this is likely to be a key mandate, a key point for her mandate, trying to have a little bit of these tensions with China basically are not likely to dissipate in the near future.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.